But I have to talk to you about something very, very significant and serious today because, yep, I had a chance over the weekend to take a look at consumer sentiment, and it has fallen to all-time lows. This is the lowest level it's ever been since they started tracking back in 1952. This is not a good thing. But there are a lot of things that lead into it because this is a con game. It requires confidence. And when that confidence really starts to crumble, you got a big problem. The governments, the central banks have a big problem. Gas prices have gone up fast. They will take longer to fall. So these high gas prices, how do you think that might possibly impact consumer sentiment? Not in a good way at all. And yeah, they go up fast, but then the stations are trying to balance out that rapid rise so that you don't get choked. So they have to stay up longer. So they try and recoup the money that they're losing during that period of time. It doesn't really matter. The point is that there are higher prices at the pump, and rapid and high inflation, noticeable price spikes in anything is a problem for confidence. Here, I love this one. Ways to cope with rising property taxes. The average bill rose 3% last year. Appeals, exemptions, or deductions could help. But actually, you know what helps even more? Having gold to enable you to always pay your property taxes. I recently did a video on that. If you haven't seen it, go back and take a look at it. It's part of the strategy because what we're really looking at are patterns that repeat every single time. And I don't know, do you think this time could be different? You know, that's what they always say, but it never is any different. And I don't think this time is going to be different either. So are you really ready for this? I'm going to get into more, but the one last headline that I want to talk about or bring up anyway, because the U.S. begins the first steps to refund $166 billion taken for illegal tariffs. These payments are for importers, not consumers. So all of the tariff inflation that you paid, you're not getting any of that back. And I'm not so sure that you're seeing prices decline either. That all goes into sentiment. But, you know, consumer sentiment is not something that we can afford. So here are the 6 stages in the life cycle of money. You can see that the foundation is the gold and the silver. But then they introduce fiat money. That's free market money. That's what they're calling it here. Government then regulates it, which means that gold and silver are pushed to the back. They're not eliminated from the system, but they are eliminated from your ability to use them and maintain your purchasing power as this crap grows in more dominance. So much so that the government then monopolizes the money, which enables them to debase the currency, rob you of your purchasing power until this is where we're at. No confidence in the money and in the system. And then what happens is this system collapses into hyperinflation. So I'm telling you, this is probably the single most important thing that we've been talking about for a while. And we've been talking about that loss of consumer confidence and consumer sentiment. This is from Trading Economics, and it actually shows you where it has fallen to. 47.6. Look at the low that hit. That broke every single level of support. This is what I've been watching for, waiting for. And now you are warned. So I don't know. I'm telling you, you do whatever you're comfortable doing, but I'll just put it this way. I am very glad that I have my strategy in place and executed, along with surety in food, water, energy, security, barterability, which for me is primarily silver, wealth preservation, which for me is primarily gold, community, which is arguably the single most important thing that I ever talk about, because we have to come together in local community to create surety in all of these areas. And we have to create a global community to get redeemable gold, sound money back in the global monetary system again. We have to do this for the future generations. And now, because consumer sentiment has fallen so far and broken that last level of support, I'm telling you right now, you can believe me or not, but the clock is ticking. And that's what I've been saying to you all along. When this happens, we are running out of time rapidly because it's a con game and it requires confidence. And this was broad-based against every single consumer area of the economy. This is not good. And what happens to the markets? Well, we're in melt-up mode. We've talked about this before. So even though consumer sentiment fell to the lowest level ever since tracking began in 1952, stock markets don't care. Look at the earnings. Look at this. Look at that. It's all lies. How many times can you be lied to when you do not know the truth? Every single time. Now, this is the single most important thing that I'm talking to you about. But next week, I'm going to be showing you how they use these markets, these spot markets, to keep that lie going. But make no mistake about it, this isn't about what's happening in the economy, and it's certainly not what's happening to the consumer. This is all about a trading market. Once we shift it into a pure debt-based system, it's all based upon cash flows and how much the government can print and push out there into these intangible assets. And it's hard for me to even call them assets, because the reality is that you can only convert this stuff into dollars, into this stuff that has seriously, absolutely zero value on its constant march to zero. So if you haven't gotten prepared and created surety in food, water, energy, security, barterability, wealth preservation, community, and shelter, get it done. What are you waiting for? Because you can mark my words on this. I'm putting my neck on the line and I'm standing behind this. This consumer sentiment piece is not good. It tells you how close we are to the end. Because first it was bank-to-bank trust, then it was central bank to central bank trust, then it was markets to central bank trust. Now it's the public, and that's the biggest factor of all. Are you ready for it? Because you need to be ready for it. Because at the same time, what are people anticipating? Higher inflation. Inflation expectations are reaccelerating. They are trying to get them anchored, what they call anchored, which means that they believe the credibility of the Federal Reserve. They believe that the Federal Reserve is trying to get that 2% target, which is garbage anyway. And it was really interesting. I was listening to the confirmation, or the hearing, it wasn't a confirmation, the hearing with the proposed Fed chair, Warsh, and he said, well, he has a different definition of price stability. I said, oh, he does? Okay, let me hear what it is. It is prices that move up. It's actually not a different definition, but it's prices that move up that nobody talks about, meaning that it moves up slowly enough that you don't change your behavior, which is exactly the central bank definition of price stability. He has the same definition. How about price stability definition being the price of that milk does not change? It has a stable price. Because even if it just goes up 2% a year, it's still going up, isn't it? That's not a stable price. But if you don't change your behavior, but rather you take on more debt to do it, they get what they want. They get your purchasing power. You have to work harder and harder and harder. And this whole affordability issue, when you look at the debt levels and the fact that most Americans cannot come up with $400 in the case of an emergency, we haven't been affordable in a very long time. And when you compare incomes to gold from 1913 to 2026, we are getting paid less than we were at $68,000 for an average wage, than we were at $800 for an annual average wage back in 1913. Corporations got what they want. They got to pay you less and less and less for your labor. What else do you have to barter with? You need to learn some more skill sets. I'm telling you right now, take a look at what's happening with the money. This is the money printing. And this is the M2, which means it is not the broadest base of money, but it just broke, right? Took a little dipperooski there. Oh, no, 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 no. We can't have that happen. We need all of this money just sloshing around in the system, sloshing from this asset, this trade, to this trade. That's really what it is. It's a trading economy. Banks are making a fortune off of this trade. They used to make money off of lending. Yeah, they don't make so much money off of that. They make it off of trading. It's all speculation. How do you feel about it? And we really don't even know that level of speculation. But I wanted to show you this because I talk about the velocity of money. That is the speed at which money changes hands. And this, you might recall, was I showed a long-term chart. And if you want me to do one just on monetary velocity, a little thing, I can do that. And that's probably not a bad idea anyway, to do it. But monetary velocity, is the speed at which money changes hands. So, for example, in a stimulated economy, if I have a good week, I might say, well, I've had a pretty good week, so I can take my sweetheart on that vacation that we've been talking about. And now you book the vacation, so the money transfers from you to the agent, travel agent, hotel, restaurant, and all of that. And maybe you're feeling pretty flush when you go to a restaurant, and so you leave an exorbitant or a nice big tip. And that wait person goes, now I can get Johnny those sneakers he's been needing. So the money transfers from you to that wait person to now the storekeeper that has the sneakers that Johnny's been needing. So it's the speed at which money changes hands. When you think that prices are going up rapidly, you can pull forward, or you do pull forward your spending. So you see that big spike in the velocity of the money, and then it's slowed down the speed to a degree, but it continues to go up. So what I just showed you, these are the two things we've got to be paying a lot of attention to. The sentiment, inflation expectations, and how rapidly people start to spend whatever money comes into their hands. This is exactly what happens during hyperinflation when they realize that the currency is being devalued so rapidly. Well, they go and they spend it on anything that they think can hold its value better. So really, when confidence dies, so does that fiat money. Absolutely, 100%. You can see it. You can see that pattern shift. I'm going to be watching for a big spike in it because, quite honestly, back in 2013, it was lower than it was during the Depression, according to the Federal Reserve. That's not my opinion. That's according to the Federal Reserve. This is not good. Everything that I'm showing you, I wish I could show you something else. And by the way, we've been talking about this quite a bit over this period of time with that runoff. This is the Federal Reserve balance sheet. And you can see since 2008, but right up. Well, all of this money printing that they did in 2008 had a whole lot more impact than it did. That big spike up, that was 2020. And they've been trying to just let things run off. In other words, when a bond matures, then they just don't reinvest it, right? So they haven't been selling treasuries. They've just been allowing their balance sheet to mature and run off, although they have a lot of longer term stuff. However, I told you when they made the announcement that the balance sheet runoff is over, and this is what it's looked like since they made that announcement in December. I'm telling you right now, you guys, are you ready for this? Because it's over. Now, let's take a look at the spot contracts. I really, really, really want you to get that this is fiction. This is trading, easy peasy to manipulate. Doesn't reflect the true value of this. But this is the spot gold contract. And you can see where it topped out, right? And you can see where it is right now. And that line is showing you that it was trying to break out, right? Break above, like the spring, right? Whenever you put pressure and you artificially push down on something, when you remove, and I didn't do that very well, but when you remove your hand, it springs and shoots in a direction. Do they want spot gold contract to go up? No, because then you might be wanting to buy gold. People always want to buy on the way up. I'm telling you that without any doubt in my mind, we will have significantly higher gold. But in real terms, I don't personally care what happens to the contract, because they could create as much gold that does not, and silver as well. And we're going to do the silver contract as well. But they can create as much of that as they want to without limitation, and so dirt cheap. They can control many millions and trillions of ounces of gold to reflect the trading market. Easy enough to suppress. But the 200-day moving average, I pulled this data from Friday. The 200-day moving average, 41.9143. So on Friday, where it closed at 48.33, it's a bit below that now, but it was still, what does that say? 15.33% above that 200-day moving average. Do you remember me telling you that 10% above the 200-day moving average is a lot? And that 200-day moving average kind of works like a rudder on a boat. And so if the spot price is a water skier, there's only so far below or above that it's going to go before coming back to that center. So none of this even technically does not put it in a bearish market, but it is a contract. And it does not reflect the true fundamental value. And you need to understand the true fundamental value of anything that you're buying. If you're sitting in the stock market or you're sitting with cryptocurrencies, and by the way, this is the physical representation of a Bitcoin, which does not have a physical body. But, I know now why they put it in these cheap cases, and I probably didn't even pay more than $5 for this thing. It's because without it, boy, that gold color just wears right off because it's a fake. They want you to think that it's like a real gold. It's not. It's not. It's not. It's quite simple. It's not. But if that's where you're holding your wealth in these intangible assets and you can only convert them into dollars, you got a problem, because the real trend is not whether or not they make the stock markets melt up. We're in melt up mode. There's no doubt about that. And that's what always happens before a crash and a crisis. I don't care about, well, I do care because I want you to be prepared and I want you to be ready for it. But the reality is this is a trading market and this is your opportunity to, it really only impacts the raw stuff. And then there are still premiums in there because of the true supply and demand dynamics. That is taking hold. Make no mistake, the paper markets will fight it, but doesn't really matter. At the end of the day, it's what's going to happen. Period. End of discussion. Been in these markets on some level pretty much my entire life. No doubt about it. I understand the truth of it. This is your spot silver market. And you can see these big red line down, whether you're looking at spot gold or you're looking at spot silver. Did these markets really change that fast? No, they didn't. I'll be talking about that in more depth next week for sure. But what we see here with spot silver is, guess what? It's already broken out. And that means that I would anticipate higher spot silver, no matter what happens on a day-to-day basis. But again, where is that 200-day moving average? My goodness, it's at $60.26. So with the spot as of Friday, I have to look over here, it's still 34% above the 200-day moving average. If 10% is a lot, then can you see that those spot contracts remain in overbought territory? They don't mean anything, nothing. Look at what's happening around the world. They want to keep you away from the physical metals because this is truly decentralized. This is truly the only financial assets that when you hold them in your hand and they're in your name, you own it outright. Period. End of discussion. Nothing else. No other financial assets can say that. And that's according to the Bank for International Settlements, not me. Thank you guys so much for being here. I cannot even begin to tell you how much I appreciate it and how much I care about you. It's why I could not just let the lives go when I was taking my little vacation. But I'll see you next week, same time, same place. I'll answer those questions, and I'm going to show you the truth around the spot markets, unless something else major comes up between now and then. But make no mistake about it, I got to repeat it one more time. Consumer sentiment dropped like a tank. This is not good, people. Whatever it is that you're going to do, food, water, energy, security, barterability in any form, right? Wealth preservation in any form. Community, meet your neighbors, meet your farmers markets, build that community. There's so much strength in numbers. Join the global sound money movement. Let's take our power back. I know that together we can make a positive difference for a lot of people. And until next we meet, no matter where you are in the world, please be safe out there. Bye-bye.